What's up? Welcome to Blockchain Tech and Finance News with me, your host, KinToshi. If you're on the YouTube side, please do subscribe, turn on the bell notifications here to Blockchain Tech and Finance News. So adjusting some things. I've got a few different articles here. So go right on into it. Check my monitor levels are playing all right in the background. And yeah, if you're on the YouTube side or the Twitch side or the Twitter side, you can chat with me in the chat. I can see your chats in there. Let me know your comments. Let me know what you'd like to see here. On Blockchain Tech and Finance News, or in the comments afterwards for this show stream. All right, monitor graphics are monitor levels, not graphics. Monitor levels are working fine. So let's go. So this first article I have is a crypto wallet shows an investor made an $8,000 Shiba Inu coin purchase last year. Today is worth $5.7 billion, which I find astounding. Crypto investor bought about $8,000 worth of Shiba Inu coins in August 2020. Just later, the $8,000 trade has morphed into a value of about $5.7 billion. Shiba Inu coin is up more than 7 million% since its debut in August 2020. In what's being dubbed the greatest individual trade of all time, a crypto investor turned about $8 into about $5.7 billion by buying trillions of Shiba Inu coin shortly after it debuted. The series of trades began in August 2020 when the investor bought about 70 trillion Shiba Inu coins, according to their associated crypto wallet. Shiba Inu coin began trading on August 1st, 2020, and the investor took note that day and made their first Shiba Inu purchase, buying about 70 billion coins. About the time of the investor's $8,000 purchase, Shiba Inu coins were trading at about this decimal precision of USD value. Today, the cryptocurrency is trading about this much higher, which represents a swift 14-month gain of more than 7 million%. The crypto wallet now owns more than 13% of the total supply of Shiba Inu coin, which has a total circulating supply of 549 trillion coins, according to CoinMarketCap. Shiba Inu's unlikely rise has catapulted the meme-inspired cryptocurrency to a total market valuation of nearly 45 billion, eclipsing Dogecoin and becoming the 9th most valuable cryptocurrency as of Thursday morning. The move higher has been a head-scratcher for many investors who see Shiba Inu coin as nothing more than a joke based on another cryptocurrency known as Dogecoin, which itself was created to make fun of other cryptocurrencies like Bitcoin and Ethereum. Whether the 70 trillion Shiba Inu coin holder will be able to liquidate their holdings without taking the price remains to be seen, but for now they're just holding. So set $8,000 into 5.7 billion. Not a bad trade. Not a bad trade. I say so myself. Not financial advice, but hey, gotta give them some credit. Just raise my microphone up a bit. Whereas I have it like all the way down. It's like slouching over. All right, but yeah, if you're in the chat, chat with me. Let me know. NG Corn Plumber, yo, what's up? How you been? I've been all right. Hacker, what? 5.7 billion, bro? Where can I get that money? Go check out Yeetcoin. I'm developing a project called Yeetcoin. Not financial advice, but you can look into it. I do development work, so you can go yeetcoin.net, and very early just start building the project up. But hey, let's go on to the next article. I'm not pitching or plugging. I really try not to do that about my own projects. I'm gonna spin up this next article here and keep on reading. And I've got to go for the day into coding education courses to work on. Let's go. All right. So this next article I've got here is from Hot Hardware by Keith May. Forget crypto high scores. Ubisoft's blockchain games will let players win cryptocurrency bounties. So if you're like me, you love gaming, and you also understand about blockchain and cryptocurrency like that, then yeah, most definitely this is pretty big. Ubisoft going into cryptocurrency blockchain gaming. I'm sorry, blockchain gaming. Oh, to win cryptocurrency bounties. So I want to know more about cryptocurrency, NFTs, and blockchains are modern buzzwords among gamers, and whether you love them or hate them, they're here to stay. Meanwhile, Ubisoft can't seem to to keep itself out of the headlines lately. Apparently, and the company is back in the limelight thanks to its latest earnings call, where Ubisoft mentioned several times its involvement and investment of blockchain-based gaming technology, specifically the fact that it'll be funding the blockchain gaming-focused company Animoca Brands, a self-proclaimed global leader in blockchain gaming. But what does it mean? What does it even mean to be marrying gaming with blockchains and cryptocurrency anyways? On a very deep level, the idea would be a different way of earning in-game assets and items where you'll hold something like an NFT non-fungible token to ensure that the item is yours and can't be taken away. For those needing a quicker primer, an NFT non-fungible token is a unit of data in a blockchain that can be represented as a file like an image or videos. It could be your Fortnite skins, for example, CSGO items, if there's skins and items in there. You could see how Ubisoft could easily replace an NFT image with something like a very unique skin or for a character. Yeah, there you go. That you could earn or buy, and it could be a limited and rare item with, like, for example, like only a certain amount of quantity of them ever exist in all. And that's just one way the blockchain could be employed in gaming. Just one way, yeah. However, Ubisoft isn't building its own games on this platform yet. The idea right now is that it's investing in other companies and allowing them to do their thing. And it'll be what Ubisoft learns about how these companies like Animoca Brands use the technology to then be studied and possibly applied to Ubisoft's own games. With almost every game that Ubisoft has made having some type of virtual currency tied to them, it would be interesting to see how they could implement a cryptocurrency that could be transferred between different games within its library. For example, playing Assassin's Creed with over 100 hours racking up tons of currency, and then wanting to try out something new in Rainbow Six that you just couldn't earn enough in-game change for, might be a pretty cool perk for some gamers. So it's like cross game currency. What is it? Ubisoft token, Ubi or something. That's all my thought is on about that. Maybe nothing is set in stone for Ubisoft, and the company hasn't moved forward with their own use of blockchain, but it's going to be interesting to see where it goes with the whole concept. Right now, digital assets like cryptocurrencies and NFTs are considered quite controversial to many due to the impact on the environment and global chip shortages. And with Ubisoft's recent kerfuffle with fans, it might be a good idea not to stir up the pot right now, but we shall see. Let us know what you think in the comments below. Let me know what you think in the comments. All right, let's go into the next article here. Spinning up articles like Bitcoin spinning up new blocks. So this next article is from Decrypt and news of NFTs. And no, someone didn't really pay $532 million for a CryptoPunk NFT. Flash loan shenanigans apparently yielded a $500 million NFT sale, but Larva says it wasn't legit. This is from Andrew Hayward. So in brief, a CryptoPunks NFT apparently sold for $532 million worth of Ethereum. Tonight, Larva Labs said it was due to someone playing around with flash loans and isn't technically a legitimate sale. CryptoPunks are the ultimate blue chip of NFT avatar collections with dozens of seven-figure USD sales and more than $1.5 billion of trading volume to date. Even so, a $500 million sale is sure to turn a lot of heads, as it did earlier this evening. But while a transaction was made, it wasn't a legitimate sale. CryptoPunk 9,998 triggered a sale alert just before 8 p.m. EST on Wednesday with a transaction price of more than 124,457 ETH, or $532 million at the time of sale. Given that the all-time CryptoPunk sale record was merely 11.8 million, and that the current single NFT record is just over 69 million for digital artwork from Beeple, red flags immediately popped up. Some suspected a brazen act of wash trading, potentially to hide ill-gotten crypto gains, albeit one that would be very visible on a public blockchain like Ethereum. Upon closer inspection, however, the transaction looks to be the work of someone playing around with DeFi flash loans or uncollateralized crypto loans. Let me see this real quick here. So if you want to know what are flash loans, DeFi lending phenomenon explained. Flash loans are like lending on steroids, and they've taken the cryptocurrency world by storm. And here's how they work. Flash loans are a type of uncollateralized lending that has become very popular in decentralized finance, or DeFi. While they proved popular, flash loan exploits have been used to attack vulnerable DeFi protocols and steal millions of dollars. To take out a normal loan, you would need to provide proof of reserves, income, and more. Besides, forget that all of that. Flash loans are like lending on steroids. But are they a good or bad thing? That depends on who you ask. And because flash loans are both a hugely innovative and useful tool in decentralized finance, DeFi, primarily on Ethereum network. To their detractors, flash loans present an opportunity for unscrupulous actors to siphon off millions by exploiting poorly protected protocols. So exactly what are flash loans? With a run-of-the-mill loan, the lender usually wants some kind of collateral to make sure they get their money back. The contract often takes a while to get approved, and the borrower pays back the loan with interest over a period of weeks, months, or years. Flash loans are the antithesis of that. They do what they say they do, what they say on the tin, and occur in an instant because the funds are both borrowed and returned within seconds in the space of one transaction. It's made possible because of the innovative properties of smart contracts, which set out the terms and also perform instant trades on behalf of the borrower. With the loan capital, flash loans result in a profit are typically charged a 0.09% fee. If the borrower doesn't repay the capital or the trade doesn't make the profit, conditions set in the flash loan smart contract aren't met, and the transaction is reversed, just like it never happened, with the funds returned to the lender. So in theory, at least, there's minimal risk for both parties. In a nutshell, flash loans are unsecured. Instead of providing collateral, the borrower immediately repays the loan. Instead, the capital is borrowed and repaid in one transaction. Innovative flash loans use smart contracts to set out terms to perform instant trades. Flash loans are first introduced in 2018 by a forerunner to DeFi open source bank Marble. It arrived on the Ethereum network in January 2020, courtesy of pioneering decentralized platform AAVE. And by July of the same year, AAVE was regularly issuing more than $100 million in flash loans each day. In June 2021, the platform had issued almost $4 billion in flash loans. Just a little bit about flash loans right there. That I was reading. Oh, I didn't. I realized I had the same screen up. But what I read you right there was about flash loans. What you were listening to me say. That's about flash loans. So yeah, basically in a nutshell, someone bought this punk from themselves with borrowed money and repaid the loan in the same transaction. CryptoPunk's creator Larva Labs tweeted, and some recent large bids were done that way. That Ethereum is offered and then removed in a single transaction. So while technically briefly valid, the bid can never be accepted. But still, I mean, that's still someone moving, $1.5 billion. What is it? Was it 1.5? Oh, $532 million. $532 million someone's moving. Robert Miller, a steward at research organization Flashbots, tweeted a more detailed description of events as he writes, the first contract put the CryptoPunk up for sale, and then a second contract borrowed an enormous amount of money via a flash loan and bought it. At that point, the first contract sent the money back to the second one, and then the loan was repaid. Why exactly? Appears that someone was shifting a bunch of cryptocurrency around for the hell of it, a comparatively tiny transaction fee of about $800. In fact, a closer look at Ethereum reveals a note in the transaction's input data box. When you view it with the UTF-8 display option, it reads look, rare, blur, and R. Anyways, so basically what happened, a person had an ultra rare that they created this is ultra rare. CryptoPunk $9,998. They put it up for sale for whatever, $532 million, or whatever it was. And then they use a flash loan platform to borrow set amount, and then with a collateralized amount, move it. Maybe there's some profits involved in that purchase, and then bought it, received the cryptocurrency basically to themselves, but the loan amount went back and paid the platform. So it's a weird kind of like it's okay. It's like a wash trade. It's kind of like I guess like you could say like a wash trade or something. Sketchy transaction. Larva Labs tweeted that it would add filters to transaction notifications so that such flash loan fueled non-valid transactions will no longer be shared outside of shared out to the world. And Crypto Slam, a popular NFT analytics platform, said that it will delete the sale from its data set. In other words, it's almost like the $532 million CryptoPunk sale never happened, but it sure got people talking, didn't it? So that's a little bit about that. Most definitely getting people talking. I'm going to spin up this next article here. We got coming up next is Bitcoin mining giants BitDeer, Riot Blockchain in Rockdale, Texas are competing over Bitcoin mining. Let's go. Just from Crypto Decoded, two of the biggest Bitcoin mining companies in the world are battling it out in a Texas town of 5,600 people. This is from Mackenzie Segalos, writer for CNBC. Key points: BitDeer, a firm spun off of Chinese coin mining giant Bitmain, is 0.4 of a mile down the road from Riot Blockchain, one of the biggest publicly traded mining companies in America. Both are tenants of property once occupied by aluminum maker Alcoa. So in Rockdale, Texas, in this rural Texas town of 5,600 people, two of the biggest names in Bitcoin mining are battling it out for market share and cheap electricity. These rivals also happen to be next door neighbors. BitDeer is a firm spun off of Chinese Bitcoin mining giant Bitmain, is 0.4 of a mile down the road from Riot Blockchain, one of the biggest publicly traded mining companies in America. Both are tenants of property once occupied by aluminum maker Alcoa, but they likely share little else in common. Riot's Whinstone mine is run by a team that thrives on transparency and throws open its doors to media on a daily basis, while BitDeer is aloof, steeped in mystery, and definitely not keen on visitors. In this industry, everyone's like, oh, top secret, we have proprietary information. Well, actually you don't. Whinstone CEO Chad Harris told CNBC. You take a cable, you plug it into a machine that somebody else built, you turn it on, and you add to an ADA pool, and you mine Bitcoin. So why Rockdale? Located an hour northeast of Austin, Rockdale looks like a classic rural America. There are high rolling hills, pastures, and okay, that's a little bit about Walmart. I'm going to read about what the area is like. I want to know about the article, the news at hand. But to the more discerning eye, Rockdale offers all the fixings of a Bitcoin miner's dream: crypto-friendly politicians, large swaths of land, previously abandoned industrial infrastructure ripe for repurposing, and the ability to plug into Texas's power grid. Electric Reliability Council of Texas, or ERCOT, is the non-profit organization that operates Texas grid. The grid is deregulated, meaning that customers can choose between providers. Because miners at scale compete in a low-margin industry where energy is their main variable cost, they have reason to migrate to the world's cheapest source of power. The competition among power providers in Texas is a good thing for miners since it typically translates to lower rates. So a little bit about Rockdale, a little bit more. So crypto miners resolved an imbalance in work wages, probably things like that in the economy with the leaving of the aluminum industry. In addition, miners can be flexible in face of fluctuating power supplies and prices. Unlike an aluminum smelter or just about any other business, miners can deal with an outage but without suffering major financial damage. This resilience is significant to a state that has recently struggled with the reliability of a power grid, which is separate from the rest of the country. ERCOT sometimes asks consumers to conserve energy amid heat waves. The state also infamously suffered blackouts earlier this year after severe winter storms. So today's arrangements between miners and ERCOT is pretty simple and mutually beneficial. Not only do miners make use of power otherwise going to waste, they also function as interoperable load, meaning they are able to turn off all their machines with a few seconds notice when the grid is in a pinch and needs extra power. Miners volunteer to do this because of financial incentives. Miners are committed to buying a certain amount of power, and what they do is they sell it back at market value and make a profit, explained King. They have a contract of 2 cents or 3 cents, and they can sell it for $9 a kilowatt hour. There's a lot of things that went wrong. The winter storm in 2021 devastated much of the state. But I do think that Bitcoin has the potential to address a lot of aspects of that. Yeah, so Rockdale's economic value, it's not really talking about it's just talking about the economy and stuff like that. King has already fielded close to 40 inquiries from mining companies keen to set up shop there, many of whom are Chinese miners. Earlier this spring, Beijing cracked down on its domestic mining industry. Yeah, it's because of Beijing's crackdown banning Bitcoin mining. Exiled miners have since begun to seek refuge in places like the United States, which recently became the top mining destination on the planet. They have the money, they have the equipment, they just need a place and power quick, said Gibson. So, yeah. That's a long article. I'm not going to read all of that. That's so long. You can go ahead and read about that. I think it's going to talk more about the... I'm doing a brief overview, and I was talking more about the area rather than like the companies. But I'm sure... Let's see. What are the subtitles in here of different articles? Spaces. Inside America's biggest Bitcoin mine. Flash and Rockdale. The mayor is a crypto miner, it says. Yeah, so 2 companies battling out. One's a Chinese BitDeer that's from Bitmain. Everyone knows Bitmain or has heard it one way or another along the lines in Bitcoin mining pools. I'm going to spin up the next article here. And again, I'll have all these article links on the recaps on the YouTube side. You can read through them at your own due diligence. Let's go. This is from crypto.com. This is from Market Insiders on Business Insider. Crypto.com is launching an ad blitz spearheaded by Matt Damon as the platform tries to bring digital assets to customers in more than 20 countries. It's from Isabel Lee. So the key points here is Matt Damon stars in a marketing blitz launched by Crypto.com. The actor's involvement is his first foray into the digital asset space. Damon has been in the crypto platform, the company said. Hollywood actor Matt Damon is starring in a marketing blitz launched by Crypto.com as the digital asset platform aims to gain customers in more than 20 countries. He has also invested in the Singapore-based cryptocurrency platform, the company said. Damon's involvement, which is his first foray into digital asset space, was announced through a global ad campaign Thursday called Fortune Favors the Brave, directed by Oscar winner Wally Pfister and produced by David Fincher. This is our first branding campaign, Crypto.com co-founders and CEO Chris Marszalek told Insider. We want to create a very powerful connection. Cryptocurrencies are less and less about just trading and more building the future of the internet. He said partnership with Damon and other high-profile names such as Formula One and UFC are aimed at fast-tracking Crypto.com's brand recognition across the world. Meanwhile, Crypto.com said Monday that it's donated $1 million to Water.org, a nonprofit organization Damon founded that aims to bring safe water and sanitation to people in need. Crypto.com has more than 10 million users, has expressed a commitment to address the climate crisis, and has pledged to be a carbon-negative business before the end of 2022. Crypto.com follows in the footsteps of other crypto firms such as FTX, which has aggressively pushed a marketing campaign that includes buying a Super Bowl ad by tapping quarterback Tom Brady as a brand ambassador. So, more actors entering into the crypto space, basically. What that article's saying there. All right, keep plugging away. I've got I think I got 4 or 5 more articles. We'll see. We'll see what time brings us. And I'll be back tomorrow reading more articles, most definitely, that I find interesting here. A lot is like basically crypto today. It seems crypto and blockchain. Let's go. So this is from the New York Times. Banks tried to kill crypto and failed. Now they're embracing it slowly. Digital payments technology is forcing the financial system to evolve. Banks feel their power waning and want to regain control. This is from writer Emily Flitter for the New York Times. In 2014, as regulators in New York were exploring ways to control Bitcoin, executives at Wall Street's biggest banks fretted that regulating cryptocurrencies would also legitimize them, and that could threaten the finance industry. So they try to sow doubt. At the World Economic Forum in Davos that year, Jamie Dimon, the chief executive of JP Morgan Chase, the nation's largest bank, called Bitcoin a terrible store of value that was also being used for illicit purposes. At a meeting to discuss violations of Iran sanctions, Rodgan Cohen, the finance industry's eminent lawyer, warned the state's regulators that the federal government was very worried about Bitcoin and its use. Those efforts failed. New York's Department of Financial Services began issuing licenses for Bitcoin businesses in 2015. There are now more than 75 million users of Bitcoin, up from around 3 million 7 years ago, and the number of digital currencies has exploded. Globally, 220 million people use cryptocurrencies, according to a July report by Crypto.com. Most people agree that in the future, it might be 10 or 20 years, or might be sooner. Effectively, all assets are going to be in a digital format, said Thomas Olson, a partner at Bain & Company who advises financial firms on cryptocurrencies and other digital asset matters. Now, the banking industry is racing to catch up. Banks want to compete in the new world and profit from it. Their approach is two-pronged, experimenting with cryptocurrency offerings and lobbying regulators to create rules that work in the bank's favor. Some are offering cryptocurrency investments to their wealthy clients. Others are weighing trading desks for Bitcoin. JP Morgan even started its own digital currency in 2019. Instead of warning regulators away from cryptocurrencies, banking industry representatives now complain that regulators have not acted quickly enough and that their inaction is costing banks valuable time with their mission to compete. But their initial skepticism has cost them time. An alternative financial world is springing up around the traditional banking industry. Cryptocurrency startups are beginning to offer credit cards and loans. People and businesses around the world are embracing digital currencies at a rapid pace. Even governments are getting involved. El Salvador recently said it would accept Bitcoin as a legal tender. The Federal Reserve, following in the footsteps of central banks around the world, is evaluating launching its own digital currency. The traditional banking system held sway for centuries. Banks have long helped the governments control the flow of money in their local economies by taking deposits, then lending some of that money to other customers. With the rise of secondary markets for loans, banks could lend even more against the deposits they had by selling the loans to investors after they were made, and freeing space on their balance sheet to do more lending. At every step of the way, they made money. When Congress relaxed regulations in 1999 to let commercial banks enter the fray on Wall Street, their power increased again. They would now make marketplaces in almost anything, like oil, wheat, or government bonds, aiding sales and purchases of all kinds, even as they helped everyday Americans make and receive payments, buy houses, and start businesses. Digital currencies, which let individuals bypass banks and money transfers, sales, and businesses, collections by connecting people instantly without an intermediary, are threatening to take away that central role banks play. Outwardly, top executives at the biggest U.S. banks have shown little enthusiasm for digital currencies. Mr. Dimon continued to be skeptical, calling Bitcoin a fraud in 2017. More recently, he declared it worthless, and 3 years ago, Bank of America's chief executive Brian Moynihan barred the giant's company wealth managers from putting any client money into cryptocurrency-related investments. But some individual bankers were getting curious. After spending years privately ridiculing Bitcoin, Thomas Montag, Bank of America's chief operating officers asked a friend of his for a tutorial on cryptocurrencies and spent hours listening to lectures, reading books, and meeting with executives from cryptocurrency businesses, according to a person familiar with the discussions who spoke on the condition of an anonymity. The bank sees potential in blockchain, and we're currently a leading patent holder in the space with more than 160 patents, a Bank of America spokesman, Mark Pipitone, said, but we still haven't found a use at scale to make the financial lives of customers and clients better. Other big banks are embracing more direct contact with cryptocurrencies. Bank of New York Mellon and Northern Trust are working on offering custodial services to their clients, essentially bank accounts for other banks that would hold Bitcoin. On October 5th, U.S. Bank announced that it would offer cryptocurrency custody services to money managers. As it does for stock and bond prices, Goldman recently began posting digital asset prices to its marquee platform for big clients, like hedge funds preparing for a time when the bank might be able to support trading cryptocurrencies. It's a little bit about Onyx and introduced JPM coin, digital currency backed by the dollar that ran on Quorum, and internal technology that mimics the structure of blockchain, but the bank controlled Quorum. Unlike Bitcoin's blockchain, which is decentralized, it spun off Quorum to a software startup. So let's see here. I guess they put JP Coin live. So after it went live, regulators began calling, saying a person familiar with the matter who was not authorized to speak publicly. They worried that the movement of the coins around the financial system could cause a buildup of risk because they were tied to the dollar, sparking a panic leading to the 21st century version of a bank run. The bank had to cut back on the scope of JPM Coin's use. Now JPM Coin cannot be used to transfer value outside of JPM Morgan's internal systems. Bank customers can use it to move dollars and other assets back and forth inside the bank almost instantly, but it's meaningless in the wider world. Regulators have also trained their sights on smaller banks trying to build cryptocurrency businesses. In 2018, the New York-based Quantic Bank, with just $1 billion in assets, asked the top U.S. banking regulator, the Office of the Controller of the Currency, for feedback on its plans to launch a debit card program that gave customers rewards denominated in Bitcoin. All right, this is getting way too long. In the closing, we need a regulatory approach to cryptocurrency, Mr. Cohen said in an interview with Bloomberg Television last month. Creating new rules would be very difficult, he said, but that really should be a prod rather than an excuse. Goes off the little beaten path there, but yeah, banks tried to kill crypto and failed. Now they're embracing it slowly. Yeah, definitely slowly. We'll say that. All right, let's see here. So I'm going to continue the news on tomorrow. I'm going to cut the stream for the today. Tomorrow I will have U.S. regulators, some articles I'll have for tomorrow. U.S. regulators exploring how banks could hold crypto assets via the FDIC chairman. And also we've got China to release a national blockchain standard next year, says an official report from CoinDesk. And more in Yahoo Finance, we got Kathy Wood's 500,000 Bitcoin call, and we got the BBC News business for some technology news, and I'll have some more crypto news and blockchain news for tomorrow as well. So hey, thanks for joining me. If you're on the YouTube side, again, please do subscribe, turn the bell notifications here to Blockchain Tech and Finance News, and I will see you all back tomorrow. If you're on the YouTube side, please do leave your comments. What's the name of the token iPhone reacts? Yeah, I'm working on a development project called Yeet Coin. Yeah, it's called Yeet Coin. Yeetcoin.net. I don't think I can. Can I just reply to that? Yeah, I can reply to that. HTTPS yeetcoin.net. I don't really plug my own projects and stuff like that, but I do development work. I actually got to run right now. I got to go into because I like to keep learning all new things. So I got to go into my continued education courses for different programming language. I'll see see y'all back tomorrow. Cheers. Ciao. Peace be with you. Stay well. Stay safe.